5 red flag tax items that can get you audited. Ted Jenkin, Oxygen Financial. A lot of people get audited, don't they? Because they usually forget something?
Oh, yeah. I mean, I'm going to talk about this the next couple of weeks, but the basic common math mistakes is actually one of the biggest reasons. It's not so much that people get audited, but the IRS starts sending you letters to your house because you just didn't fill out your taxes correctly.
So you did something wrong. And I got to tell you, I know that you work with people on their financials, and you actually work. I did not know this till yesterday at a funeral that I was at. My new stepdaddy, Gentleman Jim, he's my daddy. I don't know what he is. Stepdad. And he goes, yeah, I do Oxygen Financial does my taxes. I didn't know you did that.
Yeah, we can handle taxes as well. Mm-hmm.
All right. I was like, okay, so you don't get people audited, right?
We try not to, but we look. I've sat through more than 100 audits, so I know what comes in these audits, and that's why when I tell you about these red flags, it's important that you pay attention to what you're doing, because if you do it right, you get less of a chance of getting audited, and if you do it wrong, you got more of a chance of getting audited.
Well, what's a red flag? Give us one.
Well, the biggest one, and one of the dreaded ones that's out there, is the home office deduction, because there's a lot of people today that are independent contractors, or they have jobs, or they're doing some freelance work, and they don't know what to do with their home office. And the IRS changed the rules a couple of years ago, guys, and they basically said, look, we're going to give you what's called to be a simplified home office deduction, where you can take $5 a square foot up to 300 feet. Now, you can also try to take a percentage of your house, but it could be more difficult to prove. That percentage of the house is the one that sort of throws up the red flag.
Yeah, see, now I'm zoned commercially where I live, thank God, on the front of my home, just the front.
Really? Your house is?
Yeah, it's zoned commercially. Like, I've had businesses, my neighbors have all run businesses. I'm the only one that hasn't up until now. So I run my yeahcomeon.com out of there, and that's where
You put up a storefront and a sign?
I don't have a storefront and a sign, but I got all my stuff down there. And
it's better than the male brothel that he was doing last year.
Thank you. Seriously. And Bailey's the first one to say, get out of there. But I went ahead and I got all my shirts there, and I mail everything from home, the scale, and I just got to take it to the post office. But that's where we run our business, and it's less than 300 square feet.
Right. So that'd be fine.
You write all that off.
I did. And I did it this year because there is a huge cost in storage and stuff and keeping all this
But, there's a lot of people that are listening that basically say, well, I have an office in my basement. My basement's like 500 square feet or 400 square feet, so I'm just going to write off the whole basement. Well, if your kids' play toys are down there and you've got, a man cave or whatever might be the case, well, it doesn't quite work that way.
But these are things that a CPA would be able to tell you. So a lot of what you're talking about right now are mistakes from people like Nate, who goes and tries to do it himself online, right? Am I correct? And I'm not taking a shot at you, Nate. I'm just saying these are mistakes for people that try to do their taxes themselves.
Yeah, well, what it is like a thing like TurboTax. If Nate does do you do TurboTax?
I do Tax Slayer.
Yeah, well, those programs will say,
they got their own college bowl.
They're highly respected in the online tax world.
Well, they'll say on there, they'll say,
taxes.
Nate, we'll guarantee you 100% accuracy. What the programs don't guarantee is that Nate won't lie, right? So they'll guarantee whatever he put. The forms will be filled out accurately, but he can tell the computer whatever he wants.
But the problem also is when people try to do their own taxes that don't know what they're doing, like every single person in this room, minus you, Ted, is that there are a lot of things that you can write off that you can't write off, hence your conversation now, that can get you audited. That's kind of my point.
It's like CPAs protect you from that.
Exactly.
Not always.
Well, that's why you pay the extra couple $100 and find a good one.
That's right.
Yeah, and I use one that I've been using, and he understands like radio and stuff, and he looks at me and goes, you can't. I mean, I come in there trying to write off anything because we get hit with a lot of costs. If Jason and I are doing something for, the police academy or something, we're going to show up and speak. Well, he and I might go buy nice blazers to look nice, but I'm like, can I write that off? And he's like, no, you can't write that off.
Well, let's talk about a big one. Think about real estate agents. This is a good example because I know
one.
You know one. And people that are in the business of doing sales, and they try to write off 100% of their automobile for business mileage because they basically say, oh, wherever I go, I'm always doing business. Well, that might be good to justify that in your head, but your regular drive to work, you can't deduct, like that commute to and from your office. And so you want to throw up a red flag, write off 100% of your automobile. I'm not saying not to write off a lot of it, but you write off 100%, you're telling the IRS, I'm doing business in this car 100% all the time.
So the example would be, and tell me if I'm wrong here, Ted, is that if every day you go have a headquarters, your job, so from point A to point B, you can't write off that trip. But if you leave that headquarters, like you say, real estate, for example, to show a house, or for us, we have an appearance like tonight, Wild Wing Cafe in Alpharetta, I can write that off. You know, those types of things. But I can't write off my drive to work every day.
That's right. Unless, Jason, you decide to stop somewhere in the middle. Like, hey, I'm going to stop and look at one of my home showings before I get to the office, and then I'm on the road. But that drive to and from the office, you can't deduct. I'm saying you put 100% of your car, you're looking for them to audit you.
And you know
put 100% of the automobile.
And I write off, like in my book, that's why I get this large 2017 from American Express. I have this black book. I know this is manual. Everybody else puts things in their phone.
What is that, an atlas?
An atlas. It's an atlas, Bailey. I can tell you so much about different countries, but I write down in here every gig that I have, and I write off the miles. That's it. Driving to a promotion, just like what you're going to do tonight at Wild Wing.
I just guess.
By the way, Jason Bailey, Wild Wing, Alpharetta.
7 o'clock.
Well, you know, Steve's doing it the right way, which is you want to try and track your odometer.
Honest.
But
I don't need the headache.
pragmatically, what Jason's saying is that most people are thinking is you're going to try and guesstimate about where your mileage is. But a lot of people sometimes don't even take as much mileage as they should legitimately. So that's, you know, that could be an issue.
All right. Let's,
what else you got?
Hold on for a second.
We got a question?
Steve in Hampton, you got a question for Ted Jenkin of Oxygen Financial. Go ahead, please.
Morning, fellas.
Hey.
Yeah, I got a question for the upcoming year. Me and my wife, we just got married. So my dude that does my taxes, he said, stay single when you're filing your taxes and everything, and you guys file separately. Now, would that be beneficial for us, or should I go ahead and claim married and stuff like that?
Well, you know, I usually like to run side-by-side calculations because sometimes filing marriage separately can be good, especially if one of you is an independent contractor. It can actually work out. But you ought to just, you know, you ought to run the math both ways. Run it married, joint, and married separately, and it'll be clear and stark which one will be better for you.
I think the question that you really need to ask yourself, Steve, is who's the breadwinner and who's going to get more money back from Uncle Sam? And if that's you, then you ask yourself, do you really want to share that with this new woman?
Yeah, I think it's no choice, brother. I got a baby on the way, too. So.
Oh, dude, I feel you.
Which she doesn't know won't hurt her, Steve. All right, thank you very much. I appreciate it. All right, give us another.
Well, that's one of the things, Jason. A lot of people have a hobby, and if you actually have a hobby, a lot of people will try to write off all their expenses, even if they make zero income. So the IRS is really dialed into businesses that make zero income, but you write off a lot of expenses. Now, if you do that several years in a row, the IRS could say, look, this is a hobby. It's not a business. So
3 years is what I was told with my business. You got
3 out of 5 years.
3 out of 5 years. You have to show a profit after 3 years of losses.
You don't have to. Look, Snapchat just went public, and they don't show a profit, and they got valued at $25 billion. The question is, are you legitimately in the business of running a business? Right? Or is this just a hobby?
Yeah.
And so the losses alone don't make it true that it's going to be deemed a hobby. You just need to be careful. Like if you're just making wax candles in your house and you sell 3 of them or whatever it is, maybe it's not really a business.
You know what I found? And I consider myself not tax dumb, but not brilliant.
But you wouldn't say you're tax savvy.
No, I mean, that's why I have a CPA, but I'm not completely stupid to the process. But what I learned this year is doing all these repairs on my primary residence, and that's important, your primary residence, is that with companies like Georgia Power, Georgia Natural Gas and stuff, there are a lot of deductibles that you can make, like a new door or new windows. There's a rebate that you get back from the state.
Yeah, because you're doing stuff as far as energy saving things.
That's right.
You're improving, you know, you're using less utilities.
And they give you a lot of money back, like up to $500, $1,000 sometimes.
Yeah, there are significant energy credits that are out there when you make improvements for things like doors or windows, or you put in certain types of water heaters and things like that. And it can be pretty significant. Or if you do solar, there can also be tax deductions around that as well. So this is why you want to just have a dialogue with somebody, whether it's a financial person or a CPA, and say, look, have I legitimately taken everything that I can? Because a lot of people cheat themselves out of getting the most that they can get back by not just even asking the questions.
Well, that's what I was telling Dumbo ears over here.
That would be Nathan's, not Southside Steve.
Because I was like, dude, you got pay the extra money, talk to somebody. He was rattling off stuff. I was like, did you write this off? Did you write this off?
You do a lot of driving for this job. You go to a lot of promotions. I mean, you do stuff. You went to the Georgia Dome with me for the last event. You could have written that off, or the MARTA or the Google, because that's why you were there.
But how much is that really getting me?
Ted.
It adds up, right?
I bet you every dollar that you take off will save you 20 to 25 cents on the dollar.
That's pretty good.
It helps. It helps.
Think about the comedy that you bring to this radio program, all based off of the marijuana use. You could write that off.
Why not? Why not write that off?
So much money back.
Sign me up.
Remember the time you quit smoking pot and you weren't funny?
No.
We almost had to let you go. Ted, how can people find you? Because I know you got some more of these red flags.
Listen, if you got a tax question out there at no charge whatsoever, just go to our website, dial it in. We'll answer your question during this tax season here because I know you want to get as much as you can get back from the IRS if you haven't filed already. And we'll give you our guide on 5 last-minute tax deductions that you should use right now, even before you file here for 2016 taxes.
Yeah, come on.
And the website, please.
OxygenFinancial.net. Just go hit it. There's a thing. Ask us a question. We'll get it answered for you.
Ted is the best of the best.
There you go. All right, headline.